Let's continue to talk on China's tariff plans. Chris Garcia is a former deputy director of the US Commerce Department. He joins me now from Washington. Chris Garcia, you may have just heard Larry Kudlow, do not doubt the president to get fair trade. But the reality is, so far, China is meeting the US toe-to-toe on every action. So we can hardly say that this tariff battle is being successful for the US.
Well, I would respectfully disagree. I think that China is eventually going to run out of goods to impose tariffs on. The president is serious about this, and I think that Larry Kudlow is as well in reflecting that China is hurting, their economy is hurting. They're trying everything that they can to grasp for something to clutch onto, some type of concession that they can look to get out of the United States. But I think the president's strategy has been very wise. You look at just exactly what we've been...
Hang on. Just pause there. We got a warning today from Toyota, as we'll talk about later in this program, that the domestic-made Camry will cost $1,600 more. The imported one will cost $6,000 more. We are seeing Ford warning that it's $800 million or so over next year in terms of tariff costs. These are real costs being borne by US companies.
Sure. No, these are forecasts, and we expect these companies to behave as they would. This is how we operate in a free market economy. Now, again, you'll pardon me.
Sure.
This is a tactic, and I think that your viewers would understand that the president is in fact serious. These tariffs they have to be imposed in order to have the level playing field that President Trump and his trade advisors have been seeking. Again, number one, it's zero tariffs, zero subsidies, zero non-tariff barriers. We want the 3 zeros. And as soon as we can get, and I think your last guest put it quite well, we want to make sure that we do isolate China, and that is in effect what we've done with the European Union coming to the table and agreeing to increase their trade with the U.S., Japan, Mexico, Australia, and eventually Canada.
That European Union deal, as you know, was a band-aid to get out of a difficult position on both sides. But the reality is, as long as agriculture is not on the table, which the French have refused to allow in terms of the EU negotiations, those talks on industrial goods or whatever, they're going to go nowhere.
Well, the facts prove otherwise. We are seeing an increase in exports. We're going to see quite an increase in exports in soybeans, as well as beef.
Window dressing, Chris, window dressing. The Europeans gave Donald Trump what he wanted, a 200% increase in soybeans, which you probably would agree is not going to make up for the loss of soybean business out of China.
Again, these are forecasts. These are forecasts. I think that we have to keep in mind that the president is looking to use tariffs as a negotiating tactic. We need to put a little bit of short-term pain in order to have long-term gains. And I think as Americans, American workers, American companies are resilient. We've been through the Great Depression. We've been through the Great Recession. We're at an all-time high right now in many figures, economically speaking. And I think right now is the perfect time to try to tackle some of these issues. And I'll tell you, this is exactly what we're looking to do. We may take a couple of hits on the chin, but if we land a couple of haymakers against China, and we put them in their place, because they have been stealing IP, they have forced joint ventures, they have stolen military aircraft blueprints. I mean, the list goes on. We have to get China to play fair. And at this point, right now, we are in a position of strength. And I think the president is very wise to continue in this direction.
All right. Chris Garcia, good to see you. Thank you.
Thank you, sir.